What we're going to do today is a little bit different. We do these demos a lot where it's from scratch. Today I want to do something a little bit different. Hopefully it's a little bit more fun, but gets to the same kind of things we want to go through. So what I want to do today is I have this test, and I've been fooling around with this test, and it's one of those things where it's like, I don't know if I like the test or not, but I thought maybe together we could improve on this test. Are you guys up for helping me with that? Obviously, with this test, options involve risks. They're not suitable for all investors. As always, consult with your financial advisor before trading options. Everything we're talking about is backward looking, not forward looking. This is only for entertainment purposes. But just to entertain ourselves, I got a big old cigar today, just a giant cigar. This is the Asylum 13. And, I'm here backtesting today, so I wanted to do it with you guys. So you guys up for that? If we just jump on the test and kind of work on it together, go through some of the features of it, and go from there? I take the immense silence as enthusiasm. So I'm going to share the screen and share the test. And I'm going to share the test. But first I've got to save the test. So I'm going to do, today's the 22nd, 8, 22, 23, group training. And I'm going to share the test. Now, immediately you might think, I don't want to do an Apple test. Come on. And you're right. I don't want to do an Apple test. This was something I was testing. I like to test. This is my little secret when using Option Omega. I like to test other tickers with the same strategies I would do SPX on, just to see if there's any correlation sometimes. So I started with Apple, but let's just, for the sake of this, change this real quick to SPX. Can you guys see my screen? So if you don't know, Option Omega goes back to 2013. We have data going back to January of 2013. Pro tip, a lot of times, particularly the options people are trading of shorter duration, you really almost want to start closer to 2018. 2013 to 2018, you could definitely do it, but it was just a different market environment and different expirations, and that made a different thing. I certainly do run tests to 2013, but quite often I will not. And in fact, for the sake of iterating quickly, I want to do year-to-date. So I'm going to do year-to-date. All these little buttons right here, these are little things that we have found people like to test quickly. So we give you little cheat buttons. But let's do year-to-date. And we have Apple, Tesla, QQQ, IWM, SPY, SPX. I would like to do SPX, unless there's someone who says, no, please, I want to go down this Apple train. If there's not anybody like that, I'm happy to go SPX. If there's someone's like, let's stay in Apple for a minute, I'm happy to do that as well. SPX it is. Let's switch to SPX. And right now, can anybody just a little options talk? As you look at this, what are we doing here? Post it in the chat. Let's figure it out together. That is a lot of smoke I just blew. Sorry. It is a double calendar, and yes, it is a ratio. So if you're new to Option Omega, let's go through this real quick. Each of these is a leg. Let's delete them. Okay, let's do it again. So when you add a leg, there's a couple different things you can do. You can say double calendar. You could have common strategies that people use, butterflies. And you'll notice that each time it's changing, right? At its heart, what we want to do is quickly allow you to build out strategies as you would see it in your broker. And a lot of times with the legs, when you're buying an order or selling an order, this is how you would see it. You're going to sell or buy. You're going to do that to a call or put. You're going to have a quantity. You're going to have a delta, which we'll circle back around to, or a days to expiration. Now, this delta, you can do this a couple different ways. You can do it via delta. So you say, in this instance, we were selling the 50 delta of a 14-day short, right? 14 days to expiration. You guys with me so far? Let me know if I'm moving too fast or too slow. Otherwise, I'll keep going. Cool. So you have a 50 delta, right? Now, you can also do some crazy stuff. You could say, I don't want a 50 delta. I want a 0% out of the money, right? Which would be the equivalent of 50 delta, or 5% out of the money, right? Or you can do fixed premium. You could say, I want to sell the thing that collects $2. I want to sell the thing that collects $800, right? Whatever. That's going to be super in the money if you do that, and that's fun. Or you can do strike offset. You can say, I want to do it 25 points away, 30 points away, whatever. For this case, and you can do that, you can get crazier. You can do 25 points away from current price, current days open, previous days close, previous week's close, current week's open. So we'll give you some options with that, test different things. But for the sake of it, let's do delta. So we're going to do a 50 delta, right? And we're going to do 2 of these because this is a ratio that we'll talk about in a minute. Now, here's the problem. We want to do a long, this is the calendar, but we don't know what the strike's going to be, right? And so in this case, we want to link it to that parent, meaning we're going to buy 2 of the same, and this is 0 points away from whatever this short is, therefore linking it. Now, this is a calendar though, so we're going to go 28 days on this. And for those of you who are new to options trading, we have done plenty of stuff on calendars before. You can look it up on the YouTube. Tons of good training out there on calendars. Calendars are one of our favorites over here in Option Omega Land. And so we like to play with them. So here we have the put side of the calendar. We're doing 2. But what makes it a ratio is that we're only doing 1 of the call side. And the call side is actually a different delta. It's 14 days away. And we're going to buy 1 of those linked again. That's 28 days away. So that's how you construct a leg. And you can do it a couple different ways. Like you said, you can also mix and match. You can do a delta and a fixed premium, or a delta and a percentage out of the money. You know, we give you a lot of different options with it. So I'm not using that exact DTE. Use exact DTE is going to do exactly that. It's only going to put the trade on if there is a contract that matches this day to expiration. All right. Why would I not use exact DTE on this type of trade? Yeah, skip holidays. It's true. There's also the concept of now it's less so this year. We're running it year to date, so it's kind of a moot point. But if you go back in time with this trade, there are going to be plenty of times where you're not going to have a 14 and a 28 day trade, right? You might have 13, 17 or something like that. We want to get as close as we can, just for the sake of testing it, right? We want to have more iterations. The more iterations you have, the more data you have, the more you can kind of figure this out. That doesn't work with every strategy, but just that's how we'll do it right now. So we're going to leave that unchecked. We're also going to leave unchecked round strikes to the nearest number. Sometimes Rusty puts these in, and that's better than anything I could ever tell you. This only will select strikes that match the nearest multiple. If you enter 25, the tester will select 4,000. If SPX is currently 39.90 or 40.10, so it's going to round to that number, right? And that's a way to try to just get to a bigger strike, bigger liquidity. Not interested in it for this test, but there are plenty of tests I use it for. Any questions so far? We haven't got to the fun part yet, and I know that, but we want to go through and make sure everyone has a chance to see what's happening. Any questions? Cool beans. We'll keep going. So the next part is allocation. And allocation is, I've always said, allocation is it's part of the strategy. Don't overlook it. It's very important, and we allow you to test it. Because a lot of times people can make a great trade, a terrible trade by upping their allocation. Or maybe sometimes a really good trade should be a better trade by upping their allocation. You have to test that yourself. In this case, we're going to do 100. Well, actually, let's start with one just for the sake of it. We're going to only trade one of these right now to test it for theory. If you had a max open trades, this is a 1428. So you could say theoretically, I only want to ever put half 5 of these on at any given time. You could do something like that. And it'll either not run it, or if you collect the prune oldest trades, it'll take the oldest one off, win, lose, or draw before you get to it. We're going to leave this unchecked right now. But does that make sense? Cool. All right, we'll keep going. Entry conditions. So usually we have an entry time, right? I want to test putting something on at 9:32 in the morning. And for right now, let's do that because we'll get more complicated as we go. You can also add multiple entry times. You could say, I want to try this at 9:32 and 10:30 and 11:30 or 1, 3. You could do that. You can also use floating entry time, which is a thing we came out with a couple months ago, which basically says, don't wait for a time of day, wait for a criteria. And the example of this is to say, in this test, I'm using intraday movement. Now, this was 5% down because it was Apple, but let's move it to 1% down because SPX doesn't move quite as much as Apple does or some other equities. So what this is going to do, it's going to say at 9:32, check if we've had a movement down, right? Now, but that doesn't necessarily work for intraday. So what I want to do is I actually want to remove the time. I actually want to make this a floating entry time, which is basically it's going to open the trade at the first available time based upon the intraday entry conditions. So as soon as the SPX goes down 1%, I want to put this trade on. That's what we're saying, independent of time. It could be 3:30 in this test. It could be 10. It could be 9:45. But as soon as we go down 1%, I want to put this trade on, independent of what time it is. So let's keep going. So you have that min move done. And in this test, you can do a couple different things. We'll back up real quick just to show you that. You could use VIX. You could say, I only want to put this on in a max VIX environment of 15 and under, or a min VIX environment of 15 and over. You could do some overnight stuff. What did VIX do overnight, percentage-wise or points-wise? You could do a VIX 9-day to VIX ratio, which is a way of just basically measuring the long and shorts to see if there's some value in that. And we've done some tests on those before, but we won't today. You can also use technical indicators. So you can do RSI, min and max. You can do simple moving averages. You can do EMAs. The EMAs are interesting because you can compare them. You could say, I only want to enter this when the 5 is greater than the 6, or the 10 is greater than the 30, or vice versa. So we give you a lot of technical indicators. Just off the top, just to learn a little bit about you guys. Do you guys use a lot of technical indicators in your options trading? Nice. Okay. Yeah, some people in OO community love technical indicators. Some people don't trade them at all. That's the beauty of it. We try to give you options. Pun very much intended. Extremely intended. Okay, keep going. So we're using intraday movement. This test so far is going to be on a percent move of 1% down. Any time of day, I want to put this on. You could also do an entry condition by squeeze metrics. I'm not going to get into that, but basically you can look them up. Squeezemetrics.com gives you, instead of a VIX, a volatility kind of metric, they give you some gamma-based volatility metrics. Pretty cool stuff. So now we move to the profit and loss section. Now in this test so far, my only criteria to exit is taking a 10% profit. You could do that a couple different ways. You could do a fixed profit. I want to get out if I make $1 or $2. You could also do a closing order. Say, I just want to put a closing order in for this and get filled because I've tested it. I know what the percent's going to be, so I want to test a closing order. You can also do that with stops. Now, we also have a couple different things for each profit and stop. You could use profit targets. So one of the things Dan Sheridan talked about was maybe you take half off. Maybe you take half off during the day. You let the rest of it ride. Well, you can do that by testing it with profit. So you could say, for instance, instead of the 10, at a 10% profit, I want to close 50% allocation, and you could adjust the stop loss to nothing or adjust the stop loss to something, right? For right now, I just want to keep this at 10%. At the stop, you could say, I want a 20% stop. And you could do that per leg, right? Out of the legs we gave you, you selected. Or just based on the total trade. You could also use a trailing stop. So if a minimum profit target's used, the stop loss will begin trailing only after the target is reached. And if there's no profit target, then the stop loss is trailing as soon as the trade is opened. And a lot of brokerages do this differently. You can read about your brokerage if they have trailing stop. My suggestion would be if they have trailing stops, maybe you want to test some stuff. If they don't, I would not, it'll just make you mad at your broker. So, yeah. So, Christopher, good question. I like to have people answer as much as I can. Anybody want to help Christopher with that question? If I'm ready to lose X2 premium, is that 200 or 300% in the tool? And Matt is the best answerer of questions in the world. So I'll keep going if you guys want to answer that. That's a great question. So let's move on to exit conditions. We have a couple of different exit conditions. You can use an early exit. So you could say, I want to get, this is a 1428 day calendar. I only want to be in this 3 days. So I want to exit, whatever the shortest is, the expirations in this case, so 14. So I want to exit 10 days to expiration. Or you could do time, and that's useful for 0 days. So I want to get out at 350, win, lose, or draw. You can also use VIX. So you could say when the VIX moves up or when the VIX moves down, or if there's a VIX ratio, 9-day ratio move up or down. When you do that, get out on that. You can also do the same technical indicators you entered on. So just reversing it. You could do that as well. And then you can also use underlying price movement. So you could say, if the price moves up 20 points or 2% or whatever, I just want to get out. Or you could base it on the shorts. You could say, say for instance, this was just a strangle. You could say if the price gets within 10 points of my short put or short call, I could exit. So we give you lots of options with that. Pun intended. Okay, and this is my favorite section. Everybody knows that by now. This is the section I lovingly refer to as the Punisher, because what it allows you to do is try to get this test really realistic. Much more realistic, perhaps, some have said. More tough than what real life gives you, which is part of the problem, I think, of a lot of traders, is that their backtesting doesn't reflect reality. And so we figure if a backtest can't perfectly reflect reality, it might as well reflect a harder reality than reality. Consider me a poet. That sounded like I was having a stroke. But I think you guys know what I mean by that, right? We try to make it harder. If anything, if there's a way where we can't get it exactly right, and we try to get it exactly right, we're probably going to get it harder. And that way you can hopefully build confidence in your testing to say, man, if I can make a profit in this test, an option mega, I feel like in real life I could actually do it. That's our goal, to build confidence in your trading. We do that by introducing some of these. So you have use commissions and fees. So you can figure out your broker, and you can put that in there. So for instance, Fuse and Tasty, you could do $1.70 opening, 70 cents closing for the SPX. You can use slippage. So you could say, With this type of trade, I expect 5 cents slippage each direction. We also have that for stop losses. If I had a stop, it would do that. You can ignore trades with a wide bid ask. A wide bid ask is, I think it's, I can never remember this. It's a percentage of the basis point between the bid and the ask, and it's a pretty standard metric that we use. So if you look up wide bid ask in the industry, I think we're using that. And if you have a specific what we're doing, I think we have documentation for it. Which, as a side note, let me just go ahead and real quick, if you're new to Option Omega, show you the coolest thing in the world. Option Omega docs, where you will be able to find almost everything you need. And if not, you can go into the Discord and ask help questions. But shout out to Matt, who runs the OO docs and does a great job at it. So keep going. Ignore trades with wide bid ask. Basically, you're saying, if things are getting wonky in the market, I don't want to test that. Just ignore it. And what we'll do is we'll show you that trade, but we'll mark it out and not include it in your P&L or anything like that. This is useful during COVID times when vol was going to 80. Now, that's true to a certain extent. What I always like to tell people, though, is if you're long gamma in a crash, you want to actually not check that, because you got better fills during COVID crash if you were long gamma and not short gamma. Does that make sense? So the short gamma people, short delta people, whatever, people selling premium, you want to flip that during COVID, because you probably wouldn't be trading during COVID. So you want to, like, there'd be days where you're like, I'm not putting this on with a 10-point pull. The range is like 250 points today. I don't want to touch this. If you're long gamma, you want to leave that unchecked, because you probably had positions on. Does that make sense at all? Okay. Close open trades on test completion. Basically what that means is, if you have a bunch of trades on, say you're selling a 90-day condor, you do it every day, and your test duration is 30 days. Well, at the end of that test, you're going to have like a ton of tests that are still on that have not closed. And so what that does is basically says win, lose, or draw. When the test is finished running, if there's still a lot of trades open, just close those trades. Cap non-opening profits at profit target. Basically, we're saying you might in real life get a better fill. You might get more profit than you wanted, in an interesting market. Let's not take that for granted. Let's assume that we're only going to get profit of what our profit target was. In this case, 10%. This is the main one. This is my favorite one. Require 2 consecutive hits at the profit target. We're only going to exit the trade when the max profit is hit for 2 consecutive time intervals. The trade will exit at that first time interval and price. But basically what we're doing is, hey, do you want us to check to make sure that this was a kind of a realistic profit that you could have got? And this really affects the test. I mean, it really can bring down the test, especially with butterflies and some things that are farther dated out. Actually, the best way to look at that one is, like, if you ever do an in the money spread, like sell like a 70 delta call spread, the test will act like you're winning, like you're going to be a genius. As soon as you flip that on, it gets very realistic, and those are usually losers. So that's how that works. Use min-max entry premium. If you're selling premium, you're selling a condor, you can say, I only want to put this condor on if I can collect $5. Only run the trades where I collected $5. Or debits or things like that. But it basically allows you to fine-tune it a little bit more. Short-long ratio basically is total short premium divided by total long premium. That's a way, basically, it works for calendars. I don't usually use it to test at the beginning, but you can read more about that on our documentation site. Use blackout days. So basically, if you like to trade during JPAL talk, you can ignore that. If there are days where you're like, I know I'm not trading, I will not trade on that day, you can put those dates in an ISO format and pass them in there. And that way, if you are trying to come up with a good trading strategy, you can try to make it more realistic to say, well, I'm not gonna test JPAL days or Fed minutes days or something like that, because I know that I wouldn't trade those in real life. So last one, re-enter trades after exit. You automatically re-enter a trade after it closes based upon one or more exit conditions. So basically what we do is we say, okay, the exit conditions I have are either expired or a profit target. If there's a profit target, I want to re-enter and delay it. You know, don't re-enter if exited before a certain day. Don't re-enter if it's exited after day. But it's a way basically of kind of rolling your position, which for a double calendar I certainly don't want to do. So that's it so far. Any questions with any of that as I get a drink and light my cigar? All right, let's keep going. Year to date. Okay, so I'm going to replace that trade we just did. Let's send it again just for those who just joined. Alan, nice. Go Tennessee. I like it. Knoxville, little city. Come visit. It's beautiful. Lived in Nashville a couple of years. Great city. Crazy big city. Okay. So let's talk through the results and then let's make this better. So we give you what we did here. It's the SPX. It's the dates. Give you the strategy. Give you the entry conditions. Give you the exit conditions. Give you the miscellaneous stuff that we did, the Punisher. We give you the P&L. We give you the compound annual growth rate. We give you your max drawdown during the life of the trade. And we give you your MAR ratio, which is basically, you can look it up, but it's the equivalent of, it's a combination of your CAGR and your max drawdown. So it's giving you a little bit more of a ratio than just looking at those two numbers alone. We'll give you your win percentage. And this is interesting a lot of times. This is how much premium you captured. In this case, it's a debit, so how much you paid for and how much you collected, how much you captured from that. It's really probably more built for short, like for premium strategies, but it works just as well for the debit. And then we give you your starting capital and your ending capital. And then some averages, and then some average losers, and then max winner and loser. And this is very useful because we give you the days in the trade. So a couple things, just as we've entered the world of, quite often we enter the world of help desk stuff at Option Omega. Couple things straight away. Someone might usually reach out and say, this only traded 13 times. I would have thought it traded a lot more. Let's troubleshoot that together. Someone comes to you and says, hey, you're a master options trader. I know you use Option Omega. Why is there only 13 trades in this test? Look it over. Margin, okay. 1% moves don't happen that often. That's right. These are both good things to look at. Max allocation. Now, a couple things to look at here. How many contracts am I putting on per trade? We got one, right? I knew Matt would do it. Matt's gonna straight post some documentation wisdom for you. We have one contract per trade, so it's pretty limited, right? I am saying 10% of the portfolio, so in this case, I'm allocating, 10% of 100,000, 10,000. So that should probably cover it, right? Although you might run out if you're in the trade, if you've put 5 of these on before one closes, assuming you're doing it every day. But that, again, you have to think a little bit. Would we really have 5 days where we open up down or enter move day down 1%? Would certainly happen before, but that's pretty rare. And so in this case, I think it's safe to assume that we have 13 trades because year to date, there's been 13 moves down, 13 1% intraday down moves year to date, right? And so I think that's probably why it did that. So after that, let's go through the trade log. And the trade log is kind of where you really start digging into stuff. Because what we do is we give you the open of each trade, what time it was put on. And notice, because we're using floating entry, these are different times. It's just whenever it happened. And we give you the strikes that you used. And then we give you when you closed and why you closed. You hit your profit target on all of them except for one. Beginning one, the first of the year, actually. So, and then we'll give you the max loss, your max profit, the margin required for that trade. And so we give you quite a bit of data to play around with. So also, when you click this right here, show trade replay, we're going to give you the trade, the underlying of the trade, and the VIX movement by the trade. And we're going to get into this in a minute. And this is usually not the intro course I did, but today I thought it'd be fun. Because a ratio double calendar is not necessarily the first option trade you learn. But I thought it'd be a good thing to kind of show some of the more nuanced stuff that Option Maker allows you to do. So let's take a step back real quick before we start kind of optimizing this. What do we look? Let's look at the trading. We have a ratio double calendar. What? Just looking at those legs, trying to think through Greeks, 250 delta puts that are calendarized, or in this case 45 delta puts, sorry, and then 135 delta call calendarized. What do we want to happen in this trade? Let's first figure that out. That probably will help us optimize this. What do we want to happen? Yeah, and in this case, Robro, I mean, there's not much room to move down to the pin. You know, maybe just a little bit, but there's not much. So you think about a ratio and you think about a calendar. What are we trying to do here? Well, basically, the premise of this is if you looked at this and graphed this out, good luck graphing it out because graphs are hard calendars in general. Try ratios, it gets crazier. But in general, we're saying the market moves up. You know, it grinds higher. It doesn't go as high. You know, it takes the stairs up and the elevator down. So usually we're taking the stairs up. So what this trade is more or less saying is we want to collect some of that short burn, the 14-day short premium, and keep our Vega high enough in that premium of the longs to not get burnt on some crazy up move, right? Particularly with this strategy, what we're doing is we're saying, let's wait till prices are juicy on those 14 days with a 1% down move, a little juicy, and let's try to get in there. Now, if you did this, I have to imagine, we'll test it here in a second, without the 10%, you might get burnt because a 1% down move, VIX is going to be higher. If we rally at all, the VIX is going to get crushed, usually, unless we're in backwardation. Does that make sense at all? So this trade is kind of like a kind of slow set it and forget it. We want some protection with vol in exchange for deltas, because this is going to be a positive delta trade, but not that positive a delta trade. So slightly positive delta trade with some Vega in our favor, long Vega. Does that make sense? We are really, side note, you can put it in the chat. If you guys are interested, I'm kind of chomping at the bit. I kind of want to do a pretty long kind of, call it a course, call it whatever, on options Greeks. If you'd have any interest in that, let me know, because I think it could benefit some of your backtesting. Certainly benefits my backtesting. So put it in the chat if you want to message me. Let's keep going. So this trade is pretty good, right? I mean, it's one contract. Year to date, pretty low drawdown, pretty high win rate, right? Let's work together now. This is the fun part. What should we do to make this test better? And there's no guarantees. I promise you. I haven't mapped this out ahead of time to look like a genius. We might make it much, much worse than this. But it's fun. Any suggestions? Let's do it together. There's no shame. You should see some of the stupid backtests I do all the time. Oh, nice. Good graph. That's real good. Thank you for doing that. Yeah, that's exactly right. That's more or less exactly what it's going to look like. So let's improve on it together. Reduce the delta a little, say to 40, but not much more. So 40 on the put side, I presume. All right, Steven. Cool. Let's do it. $42.50, 6.7 CHER. Hey. Hey. That's good. More data. So we need to go back in time a little bit. We found this trade that we like. Let's go back in time a little bit. How far back should we go for testing purposes today? Dealer's choice. 2 years? 2 years. I like it. This is fun. How would you guys like to do this more often, where we just come up with a test and try to improve it together? I think this would be cool. Community improvement days. It is. Hopefully it is fun and instructive. I'll settle for fun, or I'll settle for instructive, but not either. Boring and not instructive is always a bad goal. Okay, so what have we noticed going back in 2 years in time? Any anything you noticed straight away? Yeah, more data, bigger drawdown. We're now at a 16% drawdown. The win rate strength, funny enough, the win rate's not terrible. I mean, you're still at 90% win rate, which I'm sure most of us would love a 90% win rate. Average loser's bigger, worse MAR. Ah, the losers are too big. Great name, clicker of buttons, I like that. The losers are too big, and that makes sense, right? We don't have any metric to get out if it's losing. We only get out if it's winning. So what should we do? This is where it starts getting really complicated. What should be the metric for getting out if it's a loser? Again, you have to think about each strategy, the particulars of this strategy. You're already starting with a 50 delta. So you got 2 of those 50 delta puts straight away. Now you got some long behind it. I like that. I don't know if it'll work, but I like that. That is great thinking, clicker buttons. Yes. Smart. I just want to give a shout out to clicker buttons, because the first thing I was already thinking through it myself, like, oh, we'll just do a stop loss of this percentage. But the beauty of trying to think through with Option Omega is like it gives you opportunities to test different things. Like it's dream factory a little bit. Like, we'll forget stop loss for a second. This type of trade itself might be, we want to just get out when the VIX goes down, right? So let's try that. Let's get out. Let's get out. Oh, my little recorder's messing up. Okay, let's get out when the VIX moves down. Oh, I don't know. Should we do percentage or points, and how much of each if we do it? 20% down? I like it. When the VIX moves down 20%, let's get out. Now, what's going to happen when I click this button? Straight away, what do we know about this? VIX, let's start with 20, Matt. I like it. VIX goes down 20%. We've now added that to the test that has a 90% win rate. What's going to happen? That's right. The win rate's going to drop down. You gotta live with that. You gotta know that. Okay, that's just part of trading. You're gonna win less times. I know that's straightforward. I know that's very normal. It's not. No one's a genius. You know, that's pretty straightforward. But it's one thing to be straightforward. It's another thing to like it. And in a trading strategy, we talk about this all the time. You have to have a psychology that fits you, a trading strategy that fits you. And so some people really have to have a 90% win rate for their psychology. Some people are fine with a 50% win rate. You just got to know yourself. So in this case, know that it's going to go down. Let's see how much it goes down with 20%. Okay. Win rate hasn't gone down terrible, right? Let me go back real quick. I want to see win rate 89. So win rate we're down 9%. Side note, I don't know if you guys know this. If you click up here, if you do some test runs, it'll show you. So for a quick little eye glance comparison. So your P&L went down, your CAGR went down. Now that's what's interesting. Why do you think our match drawdown went up? Any thoughts? I don't have a good thought off the top of my head, but sometimes this is the beauty of it. You learn things as you go. Let's go back to this real quick. And I like that idea. Clicker buttons. Maybe exit when VIX goes below VIX 9 days. So let's try that. Any takers on this? Anybody who's traded the 9-day stuff? Anybody want to take a gander? What we should do on that one? Let's try 5% right now, just to see. Just to see. Just to get a little taste. Just a little taste. Oh, this is going to be a good one. I can feel it. Because my computer's thinking really hard. I have some recording software going. And hey, there it is. Now, what happened? What happened? My guess, a quick glance at this would be that might not be the best one for this test, but I love that thought. I think that's a great thought, clicker buttons, and I think that's one of the things that you certainly should test. Let's go conservative. Let's try the classic thing real quick. If we're doing a profit target of 10%, let's double it. Let's do a 20% stop loss. Is that okay? Just try, see what happens with that. That's true. You could do that's another smart one. Just do that. I do that all the time. But well, that didn't work. Let's just do the exact opposite. It's true. It's true. Okay, back to green. So that's not actually bad. The win percentage went down, right? But let's compare it to that previous one. P&L's up a little bit. The drawdowns, so it's a higher CAGR, less drawdown, higher MAR, lower. I don't know. Out of those wins, which ones do you like that? I like that top one a little bit. What do you guys think of that? The one we just ran. Ding, ding, ding. You guys ever have like movies, as the kids call it, and I'm almost 40 years old. You know how the kids nowadays say things live rent-free in your head? Have you heard that term? I have a 21-year-old daughter who says this gibberish all the time. Lives rent-free in your head. Whenever I hear ding, ding, this is going to age me a little bit. Do you remember the end of Rocky 3? How, I don't want to give it away if you guys have seen it or haven't seen it. But if you, cover your ears if you haven't seen it and you don't want me to give it away. But at the end, Apollo, you know, trains him to fight Mr. T, Clubber Lang, and he owes him. Rocky owes Apollo a favor. And do you remember what the favor is? Side note: this just Matt in real time. I'm coming up with these ideas. We just ordered some OO merch for the first time ever. We got some OO merch coming our way, and probably what I'm gonna do is one of the next cigar lounges. I'm gonna ask a Rocky question just like this, and the first person to answer is gonna get an OO merch. So, be ready for that. I'm already giving it away. That Rockies, yeah, it's going to be pretty sweet. I'll actually put it in the chat in a minute here. I don't want to spend too much time on this. Anybody else on Apollo Creek? Anybody want to guess what's the favor? What's the favor Apollo asks? Rocky owes him. 3, 2, 1. He asks him for a rematch because obviously Rocky won Rocky 2. He beat him by this much, part 2. So Apollo says, I want a rematch. At the end, they're walking to the bell. It's like cheesy 80s music. And he's like, who's going to ring the bell? And Apollo Creed has his mouthpiece on. He's like, ding, ding. That was 5 minutes. I just spent 5 minutes on that. But anyway, I appreciate you guys. Okay, so let's keep this one. Again, side note, learn your Rocky trivia, because that's what we're going to do. Okay, so what I want to do now is I want to take off this one contract, because what I want to do is I want to start trying to make this a little bit more realistic. You're probably not going to do one contract. You're probably going to do something different. So let's just say for right now, you know, this is costing about $5,000 a trade because it's ratioed, it's big, it's debit. So let's say for right now, we want to put on average of 2. So 100% of a $100,000 starting. Let's put 10%. Let's start with 10. Roughly 2 trades usually, depending on how we go through time. Might be better, might be worse, but at least now we'll start seeing it. Now we've gone from a theory to actually trying to add allocation as a part of the strategy. Does that make sense? You find a strategy that you like, now we start adding to it. Okay. We put 2 of them on there. It's your time. Any thoughts about that? It's pretty that there's not much differentiation, right? I mean, because the debit trade, we kind of know what we are. Margin's not crazy because it's debit. It's pretty straightforward, right? So what I want to do now is, and this is going to take a minute, but I want to go back in time a little bit more. So I want us to go, and this will be the last thing we do today because I've kept you guys a long time. Let's run it back to 2018. While that's running, what is your favorite Rocky movie, and why is it Rocky 1 or Rocky 4? I know. How could you choose? How are you making me do this? They're all so good. American cinema at its finest. What are you talking about? Why could I really choose only one? I know. I'm so unique in the Rocky stuff because I know people are like, yeah, that's a cool movie. I'm like, no, but they changed my life. And they're like, yeah, they're fine. I'm like, but you remember in Rocky 4 when you say the Russian, he said, if I die, I die. People are like, are you okay? So, anyway, it's still running. Therefore, we still talk about Lord of the Rings and Rocky. I think Rusty's pretty good at Lord of the Rings, isn't he, Matt? I think he might be the guy for that. This is perfect. This is great. Oh, this is perfect. I love, what a way to end it. What a way to go out. So, our final test, after beating it, refining it, Well, yeah, that's a great one, Christopher. Yeah, I mean that's 100%. For all that work we did, we won $200. Now, if that's not realistic options trading, I don't know what to tell you. All that work, thousands of dollars in commissions, we went 213. So what is the takeaway from that? What is the takeaway from that? My guess, my guess at it would be, let's look at the summary. You had a massive drawdown, and let's see here, starting around June of 2020, you had a pretty massive drawdown. You also had a pretty massive drawdown in 2018 when we had a big drawdown that last month. That's right. That is the lesson for today. It's the house always wins. So looking at that graph real quick, that's right. I probably wouldn't do this trade blindly. This would not be like an all seasons trade. Probably what I would do, one thing I think you could probably do, and we could test it, just one more test. Are you guys okay doing one more test? I don't know if this will improve it or not, but just trying to think through to show you how I think when I'm testing. Not that I have the best way by any means, but just different ways to think through it. I look at that and I say, okay, this trade is big down days and an otherwise trending up market. Well, there's a couple things that happened. Like 2018, the end of the year, we had a pretty massive drawdown in the Qs, drove the whole market down, but it was a pretty, VIX didn't get exploded. It didn't explode. COVID obviously did COVID. So what I think with this is I probably only want to put this on when it is a low VIX environment. So just for the sake of it, I want to try this with 15. So what we're doing is it's still the same criteria. If it's if there's an intraday move from 1% down, I want to put it on, but I only want to do it in a low VIX environment. And it needs a highly specific environment. That's right. That's exactly right. So we're trying to add to it. Yeah, Stephen, that's right. That you would the other thing, I won't do it, but I'll share the test in a minute so you guys can play with it. And please post it if you improve on it. I would love to see it. Okay, so that's a little bit better. A little bit better. Because but the data is so small. So but this again reveals something. When VIX is below 15, right? We've only had a couple instances where you have a 1% down day. Now, so what that makes me want to do then, let's just, again, this stuff's addicting. I'm sure you guys know that. What that makes me want to do is actually, instead of making a 1% move down, what I actually want to do is half that. Is I actually want to make it like a 0.5% down because we're in a low VIX environment. And so my computer is completely frozen. There it is. Okay. But Stephen, you're right. The other thing would be to take this and actually run it on a ZAC DTE. Only do 1428 or whatever day basically you would do a Friday to Friday or Monday to Monday or something like that. Okay, you get a little bit more. Max drawdown, right? Not a lot of trades through time, but anyway, that you're right. That you guys are exactly right. That's how you would do it. You would try to think through VIX environments with a trade like this. So what I'm going to do, final thing. What was the best one we had? I think it was that one. Okay, what I'm gonna do, I'm gonna replace the test. I'm gonna share it one more time with you guys for those who joined late. Okay, so do me a favor, please continue to work on this. It'll be fun, especially if you haven't traded calendars. It's a good test to play around with. If you have any questions, please let us know. We're on Discord all the time. Matt's the master at documentation. it's an honor to have you guys as subscribers. Spread the word, and we will continue to try to make the product better. Because, like I said, we trade ourselves, and we use this all the time. So it's built for us, and we liked it, and we wanted to share it with you guys. So we'll do some more. We'll schedule some more cigar lounges shortly. Guys, have a great day, and we'll talk to you soon.